Shit, Bitcoin's crashed again. Down 12% in the hour. I need more market shifts. Hey, what's going on guys? Hayden here, and today I want to discuss how much money you need invested to live off dividend income. And no, this video won't cover some Shiba Inu moonshot or some Wall Street bets YOLO, just good old fashioned passive investing. Now of course, this video is purely for educational purposes only and should not be taken as financial advice, but without further ado, let's get right into the video. Now I've had a couple of friends who've just taken an interest in the basics of investing, just as I did this past year. And instead of teaching them individually, I'd much rather showcase my content on YouTube in order to show them these skills and just how easy it is to invest, just once you take that first step. Because I truly had that wow moment when I first learned the power of compound interest, as well as dividend reinvestment plans that can accumulate more wealth and money over time, as long as you hodl. Now I know, when I first listened to some of these videos, I too found the terms pretty obscure, but as long as you sit through the video, the words will make sense, and hopefully you can share with a friend so you too and them can have the wow moment. Now, a concept of dividend investing that I love and I think is the easiest way to make a sound investment is through index funds. Index funds by definition are just a basket of stocks that covers a wide variety of companies within a market rather than just holding one singular stock. Now, this can be beneficial to the investor because if you own one that holds, let's say 100 companies, and if just one fails, then the other 99 will keep a steady price. But on the other hand, if you just own one singular company, and if that one fails, then your investment will go to zero. It's kind of like going to your grandma's house and she has a giant jar of chocolates. Yes, you could get lucky and fill your favourite brand like a Mars bar for instance, or it can be filled with your least favourite brand like a Turkish Delight. Now you'd much rather a mix of all different types of chocolate brands such as Twix, Maltesers, Kit Kats and so on. Another advantage of index funds is in the US and emerging markets, since 2006 it has actually outperformed 99% of active investors. But even better than this is that it requires little to no work. You don't have to read complicated earnings reports that have a bunch of numbers that you have to read through and calculate between years and future growth and all that. You also don't need to understand the bits and pieces of a singular stock. And this includes looking at the management team and how well they've been performing and the operations of the business. So essentially you can beat 99% of all investors while doing no work basically. Now you get the gist of what index fund is, I want to cover some of the types there are. And now there are many more, but I'm just going to look at some of the main ones. Now the first type of index fund covers location, and this can include places like America, which have some of the biggest companies like Google, Facebook, Apple. Emerging markets will cover some of the developing countries within the world, and this will include companies such as Alibaba, Tencent, and Samsung. Now for me living in Australia, I look at some of the ones listed on the ASX, such as Woolworths, CSL, and BHP. The second index I'm going to cover is some of the sectors within the market, and this includes the big ones such as energy, tech, restaurants, real estate, and healthcare. And yes, when I first heard about real estate being within an index fund, I thought it was really cool because I'm like, buildings and homes, as they appreciate, you can earn money off it along with dividends covering the rental. Third will include company size, whether it's small, medium, or large cap. Now this just means how big a business is relative to others, such as Apple being a large tech company, or Tattoo Chef is a small food company. And fourth, an index fund can cover currencies, bonds, and treasuries. So therefore, no matter who you are, you can find an index fund that covers your interests and you can still have fun with while knowing the market. And generally, all these funds will still pay a dividend just for holding it, which is amazing. Now for me, I just like to cover a broad market index fund that looks at a vast amount of companies as well as meeting market expectations. Now on average over roughly the last 100 years, it has grown at 8% per year in the US and generally everywhere else. And this may not sound like a lot, but when compound interest comes in, it increases to an insane amount. Now here, I've brought up a dividend reinvestment calculator, and I want to show you an example of the average Australian wage of roughly $60,000 investing in one of my favourite index funds, the BETASHARES NASDAQ 100 ETF, with the ticker symbol NDQ. Now this is available on the Australian Stock Exchange, or ASX, and I invested in the CommSec Pocket app in Australia, but you can use other popular index funds in America such as SPDR, or VOO, which are about the same. Now with Australia's $60,000 average wage, and by investing just 10% of your salary into the BETASHARES NASDAQ 100 ETF, we can expect an annual contribution of $6,000. Now for me, I like to invest roughly once a month, so we'll be setting aside $500 a month to put in the market, so we'll just put that as our starter principal. Also, this ETF has an annual dividend yield of 3.6%, which means for every $100 you invest, you can expect $3.60 for doing essentially nothing, which is fantastic, of course. The expected annual dividend amount increase percentage can be very difficult to calculate for this index fund for a long period of time, so I'm going to leave it at 3%, which is a fair number. Also, the annual share price appreciation percentage is 8% from what we know as the market average. Now for me, I'm 18 years old, so I like to put 50 as the years invested because I'll be 68, which is an approximate retirement age. But you can play around as this is whatever you feel is necessary for you to retire with. Now in Australia, you have to pay a 15% dividend tax rate, which I know we all hate, but this may vary from where you're from. Now distribution frequency should be set as annually, and DRIP just stands for Dividend Reinvestment Plan. And this automatically rebuys more shares, allowing your money to build a snowball effect, where like a snowball rolling down a hill, your money just grows exponentially over time as the snowball rolls faster and faster down the hill. Now, the moment of truth, as I calculate, your investment will be worth $4,820,451, which is absolutely absurd. And also, since we still get dividends from those shares of the index fund, 3.6% of that number will pay us roughly 173 grand that year through literally doing nothing other than constantly buying shares every month as it keeps growing more and more over time. Now I'm going to leave a link to the compound interest calculator down below, and I also want you to have some fun trying maybe putting 20% of your income saved and invested in the market, as well as also doing maybe 60 years or more to see how fun it really is looking at your money grow over a long period of time. Now this is the safest way to earn constant passive income while also not know anything about stocks. And you can still accumulate substantial wealth even past your retirement just through trust in the process and strong discipline over a long period of time. And most of investing in the long run isn't with your brain, but it's rather with your gut. Now for me, I invest once every 2 months into one of these index funds, but it doesn't matter what stage of your life or how much money you have. It doesn't matter if it's a stock market crash like COVID 2020 or right now when we're trading at all-time highs. You must maintain your investing plan, and every time it ticks off, you put the money in and forget about it. And it shows $1 million wage or a financial degree doesn't really matter in the stock market. And any average person can still reach financial freedom with just a bit of discipline and hard work. Thank you guys for tuning in my first ever video, and hopefully learned something new about personal finance. Please like and subscribe and tap the little bell icon below to get notified of future videos. Also, let me know about how the video was in the comments and any questions you have about it. I'll also leave a link to my socials below, and you can DM me any other questions you have. And again, all support is appreciated, guys, to help grow this channel and allow me to continue teaching others to reach all our financial goals. Thanks again, and Hayden out.